Ta-da-da-da! Happy Hump Day. Doc from North America. Another fun-filled day. Whoa, commercial just kicked in. Let's see. The world best trainers. I like that. There you go. All right. So what do we got today? I saw a good explanation today. I saw a very good explanation. Something about the guy was actually making sense on one of these, financial networks, and I caught the tail end of it. And what he was saying basically was there's total logic for the prices today, solely because the Congress put out enough money to keep the markets and the jobs in place to be ready to go. So in other words, instead of laying people off and firing them and people out hunting for jobs and so forth, the Trump strategy of basically having a major timeout with benefits, in a sense, was what is making the markets move back to norm again, I guess you could call it, or back to the mathematical mean. I don't know. I don't think I'd call it a norm. Ferris. You know what I always think of is like Ferris Bueller, and every time I see Ferris I think of Ferris Bueller. If it was Ferris B, I'd know you've been taking the name just from Ferris Bueller. We have a frustrating market today. Frustrating in what way? Let's see if we can help out. Maybe we look for the tree in the forest. We'll see what we can say. Just in what particular area? The whole market, like currencies and interest rates and stocks and metals, or frustrated with? Are you chasing fundamentals? No move, just sideways. Yeah, well, it's we used to, or not used to, we still do. Some of us old floor guys call that digestion, when you eat a large meal and now you have to rest and then let it absorb into the system and digest, break down, and then what happens? You're hungry again and you're ready to roll again. Undecided, mainly stock indices. Aren't they up 200 points? Let's take a look and see. Oh, we have it up there, right? Yeah. Right. Now, this is an hourly chart. That looks like an upwardly slope to me. I guess if we go like that. So since, let's see, this is now. And then this is like the London Open. And then this is like the New York close, right? So it is up, but it's not a rocket shot. I'll go. Yes. All right, I hear you. It's not a rocket shot. I think it's up 200 points, which is what it should. It's. I guess it. That's what, half percentage point, something like that. Which is, I guess I'm still getting used to it. Since 1978 or 77. I'm still getting used to this percentage thing. In other words, up 2% is aggressive, up 5% is dramatic and mind-blowing. 10% is a moonshot or a crash. Quarter percentage point is normal. I don't know. I guess I didn't take finance. I took financial accounting. As a physics science person, physiology and so forth. Percentage, I don't think I've ever had I took a financial accounting, and I never took a business course. So I have no idea where they derive these. Is this a mathematical mean for the last century? You know what I mean? Like up 0.43%. Is that supposed to be good or bad? Does it relate to interest rates? How do they, what is that all about? Doc, what about euro? Yeah, let's do that. Let's take a look. Hey, Kristen, how you doing? So let's take a look at the euro. But I'm right there with you, Ferris. I'm not really sure the percentage thing, what that's supposed to be all about. If that's good, bad, or indifferent. I can just tell you how I've seen people react. It's kind of like that movie Starman, where the woman is trying to get rid of the alien, and she's driving, and she keeps on, slow down at yellow, go fast at red, and stop at green. You know, she's trying to get a police officer to pull over and spot them. And so he goes, how about if I try driving? The alien says, and she says, how would you know? And he goes, I've been watching you. So when it comes to a red light, you go really fast. So I'm not really sure if the percentages really work on any. I don't know how. I've always wondered, what do they mean anymore? They don't mean anything now. Ever since the options have been created, once the zero-sum factor changed, those percentages have less relevancy. Let's put it that way. Maybe even when it was the other. There's euros. Didn't we go into a daily buy yesterday, or we're on the edge of a daily buy on this euro? Let's take a look at it. Where's it on the spreadsheet? Second day of a daily buy. That's what it is right there. Let's take a look on the Chicago quant right there. It's moving down. Yeah, you see the green line, and it's showing us all kinds of red dots. I think this was when I put that in there, the red dot wasn't there, and the red-green was here or something like that. I don't know. How was it? I guess something like that. Maybe it was red-green, and you can see it's underneath again. So this thing should be now like going like that. It should be in a sell. Should be in a sell. Let's see. Let's make this bigger. Move this down. Yeah, should be in a sell. So let's do this. Let's fix that on the spreadsheet. I like the spreadsheet to be accurate, matched to the charts and the math. Spot. And maybe I was thinking the other way around when I did that. So I'll go like that. Yeah, I can see the X's are still in there. That means I marked it off that I looked at it. And so it's going on a second day on the move on the downside. But we're in a buy, so it's a neutral. So it's a little tough there. I don't, I think I want to say that I have the same answer or a statement as Ferris does. And that is that it's sideways. I really don't see any real conviction to this market at the moment. This was conviction right here. You can see it on J4X. Let's put the daily in on that. You can see the conviction to this thing. It was rocking and rolling on the upside there. Like that. That's conviction. That is where the market said, hey, we wanted to do something. You can see it here on the Chicago quant. Jumps into a buy. I think it was back here. And all these green dots and above the zero line, just all that, that was conviction. And that was coming from the, what was that, the 108, 109 area, 107, 108 area. Basically, it started off somewhere around there. And we went to a weekly buy at the end of that week. And they did a little digestion. And then they took off again on the upside there. And I think we had a red and green dot at the time. That's why. No, I guess it's the histogram there. The histogram is plus. That's what it is. The white line is not, but the histogram was. It bounced off the time manifold. I don't really see a lot of conviction, on the euro. It's in a weekly buy. It's digesting again from a move of 400 pips. And you're seeing the digestion right now. Maybe it's going to, as long as we stay in a weekly buy, chances are this thing, the odds are like 8.5 out of 10. It's going to go on another move on the upside, which will drive 54 really crazy because he still can't find the fundamentals that keeps it above 100, a little on 112. So, and a lot of fundamentalists must shake their heads all the time like they're blithering something or another in Brussels. Why is anybody buying this thing? It just says to me that we are in a the central banks, which are now the buyers of last resort. They've removed J.P. Morgan and Cornelius Vanderbilt and any big investor. They've removed them as the buyer of last resort after a downturn of a certain period of time, what we refer to as a recession. And so now the central banks are doing exactly. See, for the longest time, after Mr. Woodrow Wilson created the central bank, the Federal Reserve, they really didn't do. They were supposed to replace the private investors. That was the objective of the central banks, to create liquidity. Okay, be the mindset. In other words, government employees can think better than private investors, and so they can react faster because they can do it with more money than God. Whereas, the private investors have to think, okay, is this really worth buying right now, or is it overpriced or undervalued? And so they reached up. Well, now we have government workers, basically. Anybody that works for a central bank or a Federal Reserve is basically a government worker. It's a quasi-government agency. So, they're government workers on some level. And so they have the mindset that they can do this faster and smarter. Now, it took, I guess what, from 1913 to basically 2008, I guess you could say. So it took, what's that, 87 and 8 is 95 years, almost a century, for them to figure out how to swing the big stick. In other words, how to really run a central bank the right way to replace the private investor. And they've done it. The big private investor, the ones with the millions and the billions, And so that's what they've done now. So now they step into the market not every 3 months or every Thursday, adjusting the discount window. Now they step into the market every, hour. They work orders. They buy ETFs, they buy bonds, they buy T-bills, they sell them if they have the inclination that they should sell them, and then they buy them again and keep the market, stable. And so probably what you're really looking at is this is the gauge. This is a gauge. All these currency pairs and so forth are the truest of true gauges. Like when you look at you're driving your automobile and you see the gauge that says that your fuel is low, or that there's a problem with one of the doors that's open, or any of the warning lights. We used to call them idiot lights, but any of the warning lights, comes on. And so when we're watching the pairs trades, we're probably really seeing the gauge to the way the central banks think the world should, money should flow, and stability. And so if you keep a firm euro, maybe corporations over there are going to lay off less people, or they're going to try to invest a few more euros to maybe start a new product line, or, something of that nature. I mean, if the euro is trading at 67 or 82, the way, 54, and a lot of us, look at the intellect side of it, or the value side of it, you would be like, oh, God, this thing is way overpriced. They're a bunch of morons. But the central banks keep these things in a controlled environment now. They're in a hothouse, I hope that answers your question there. And that's pretty much where we're at. So that's why we quantitative trade, because the math always precedes the news. In this case here, they're in the open market every day, the central banks across the planet. And so we need to watch the way products move versus what the old-fashioned analysis of, employment and inflation and consumer pricing and PPI and GDP and legislation by the local governments on how they let corporations work and how much money they're allowed to keep, and so forth and so on. I hope does that make any sense? I hope it does. I think it does, but then that's me. I'm a little touched in the head. So, all right. So there we go. There's the euro. So now let's jump over to the cable. See what the cable's doing. And there's the cable. And you can see the cable was up near 127 yesterday, right? Right. Yeah, it went up to 126.87. There's a 7 in there somewhere. And now it's all the way down again. And so where are we on the spreadsheet on that thing? That thing is also in a weekly buy and was in a daily buy from yesterday and going in the wrong direction again. So let's take a look at that. There we are. Still looking firm there, really. This thing might have a little bit wider range too. But, this thing has been pretty aggressive. You can see the weekly is just climbing. It is not taking it too serious. It's and the green is really, it has a red dot going on there, so it means to buy it at the end of the day. In other words, this morning. In other words, not at the close of yesterday, but the beginning of today, really. That's what it really starts off with. So that's where we are there. That's what the red and green dot always emphasizes, that if it's above the zero line and everything's moving and it's a red and green, you wait 6 hours and then you buy it. So you're kind of more of it's a buy now. And then the odds are really heavy, 8.5 out of 10 that it's going to go up, especially in a weekly buy. And so it doesn't really look like it's trying to roll over too much, but it is definitely down 100 pips from yesterday's high. So again, just the central banks deciding where these things should be. And you got to assume who's making that decision for Turkey. Let's take a look at the Turkish Lira. I saw a story this morning where President Erdogan has them all upside down because he is really got them involved in, I guess it's Libya. And so Russia and the United States are on one side and Turkey is on the other, and that's really got them all jazzed up. You can see the strength in that thing. And then where are we at there? That's right there. We're 9 days in a daily buy. At least one of these things is working. They're in a weekly buy and a daily buy and going up, whereas right now the cable is not doing that very well. I guess it would be this morning if you bought it this morning, or whatever your this morning is. And then for the euro, that was just flat out bad doc. He just put the number in the wrong spot, and that's where that is. So but the story itself was entertaining. That caught me more than anything else. Is the fact that President Erdogan is taking on Russia and the United States in Libya. And I'd imagine that has to have to do with something to do with their currency. I would think that at least. At least in my head it does. So I'd imagine they're, pressuring them on some level just because of that alone. That's the way it looks to me, at least. I don't know. I'm not. I guess I don't even get that the whole thing. I don't know what's going on there. You got slave markets now in Libya. I mean, that place is all over the place. I mean, I don't know what they're screaming and yelling about here in the States when they've got slavery going on live in other parts of the world. So, in what is allegedly, developed countries on some level, what is going on there? That's crazyville, right? Crazy. All right. Let's see. What else can we say about this? Nothing really. Just the way it, why it's staying up in that range. Like I said, I've thought that this thing, I watched, the Chinese yuan, which is totally controlled 100% by China, of course. It doesn't float, for the second largest economy, we have to say really the alleged second largest economy in the world. Just because they have a large population, one of the largest populations in the world, doesn't make them the second largest economy in the world. It just means they're second largest consumers in the world. I mean, they have a currency that trades. You would think it would trade like in the top, in the top 3 percentage wise, or top 4 percentage wise, or the top 5 percentage wise, or the top 6 percentage wise, or the top 7 percentage wise. It doesn't. It trades less than 1% of the world currencies in the world. That's it. It trades less than 1%. So it's awful hard to take those numbers from China so serious. Whereas, like Japan is, currencies flying all over the place. Even if the central bank is deeply involved, it's trading, globally, maybe 15, 20%, 30% of the world economy's currency trading is Japanese yen, and then I guess they're like third, and maybe the euro is second, something like that. And then you can park, the Chinese currency trading with Zimbabwe or something like that. It's less than 1% of the world action. So it's a real confusing thing to me about that. I don't know why people don't really take that serious. I do. It makes me think that, when that thing finally does get its 4 wheels and it comes out on the road, it's going to be like, trading at 20 or something like that, not 7. It'll look like the ruble. It could be in the 30s or the 40s or something like that. and then that'll really drive them totally bunkers. And that's why they will keep the almost $1 trillion dollars of equity in the United States, because they're going to need to reach for that trillion. And so that's probably the whole story right there alone. But that's central bank action around, moving around the wand, not with the wand. The wand itself is just like a picture. It's like a advertisement picture of some form. All right, let's go over to the Canadian. What did I see the Canadian do? It went into a buy. There it is right there, but it's in a weekly sell, so it's a neutral position again. Another one of those that doesn't have any real direction. Let's see. Canada. See, it's kind of got that same thing that First is complaining about. It's going almost nowhere right now. And let's see, what are we in a buy? And it's just up. It's up or flat basically for the day. Let's take a look at it through the Chicago Quant view. Now it didn't go into the buy. How about that? That's wrong. Also, how did we do that? We did two of those wrong. Spot. Oh no, it's in a sell. It is in a sell. Don't ask me why I thought it was in a buy. It's my dyslexia. I put that in by hand. So, once in a while it can be a tad. Matter of fact, now you say that, someone emailed me. Where is that email this morning? Someone emailed me. Who was that? Where is that? From the webinar here. Someone asked me about two products. Let me go find that, because maybe I can answer that one too. Where was that? I saw that this. When did I see that? There it is. Hey Doc, how are you? Oh, I'm cool, thank you. Do you know the daily buy and weekly buy numbers on Oracle and Zoom stocks? Sure, I'll look them up and send them to you. So let me put a respond to that, and we'll take care of that. So Zoom and Oracle, we'll go find them and send them to you. Let's see, where are we at? So, okay, so it isn't a weekly. I could have sworn I said to you just a few minutes ago, I thought I saw it in a weekly buy. I mean a daily buy. It's not. It's in a sell. So it's doing, but 1 day? Oh, I guess so. Yeah, I guess it's all right. Yeah, 1 day. So you can see here the product is trying to drift down. The buy is 37.28. It's a good distance from there. On J4X, you can see it's kind of sleepwalking its way down. Not too excited. I mean, overall, the weekly trend has been interesting, but overall, the daily is not dropping. I know that some of us here would love to see like one of these big ones, instant gratification. I like that. All right. Let's see now. Let's see, where are we at next? Let's go to the Swiss franc, and there it is right there. Oh, you know what I did? I saw CAD Swiss. I saw the one there, and I thought to myself, but then somehow or another, I saw the weekly there, and I saw the daily there. That's what happens when you're dyslexic and both eyes don't go in the same direction. Let's go take a look at the Swiss. I have something called a fusion issue with my eyes, a fusion issue. So you can't really tell looking at me, but one eye looks one way and the other eye looks another, but you can't see it. And so what I do is I'm kind of like that little reptile character where those eyes go right and left. but they don't move that way. It's the lens in them that's doing it. And when I look perfectly straight ahead, I lose the width of my finger, which is not bad. I mean, you just, because it's, my mind calculates, and that's why my mind works the way it does. It's called a fusion problem. It's very rare. I could really brag and tell you some of the famous people in the world that has had a fusion problem with their eyes, but it's not worth it. It's only bragging. All right, now we're heading over to the Swissy. So right there's Swiss. And again, sideways digestion. There's not a lot of trading action going on there. And let's see what it does on the spreadsheet there, right there. 3 weeks in a sell, 2 days in a buy. Yeah, a lot of nothing right there. Yeah, look at it. It's trying to break down today pretty well. We're going to sell. I guess that's the weekly trend, trying to pull it back down again. And that is what they say about that. Now, let's see. Who's next on this hit parade? I think what we've been doing lately is from there, we jump over to, what is it? We go to the Euro Aussie. And you can see there it's 9 weeks in a sell, 1 day in a sell, and it's supposedly the inverse relationship of the stock market here. Right there. And so let's take a look at that. Euro Aussie. What an interesting combination. It would have an inverse relationship with the equity market in the world. I mean, we could probably go into all kinds of psychological things. I think a therapist needs to give us an analysis on that more than anything else. The euro and the Aussie have an inverse relationship. One, I can understand the Aussie because of the carry trade that everybody does all the time with the Aussie against the dollar. And then the euro, just ask 54, you know, incredibly overvalued. So I guess that's the relationship there compared in a fundamental way, just like the way the stock market is allegedly or is overvalued in old-fashioned investing concepts of this, you know, pre-1976. So you can see it's been sliding down here. Surprised it took on our work. Surprised it took. You can see it on J4X. It's been sliding. So you would, but you can see our lines here are not really been sliding. They've been rallying up too at the same time. Euro Aussie, right there. Activate. Got a couple red dots going on there. You can see it's. I guess. No, I'm not sure. Well, I don't think we've advanced that, have we? Because it wasn't a buy there, right? Right. Yeah. And now it's been in a sell there. Right. Okay. And this should be turned into like a buy or something like that. Make that a greenie. That's that slide that we had in the stock market. Well, you can see here it's been underneath. And then when you look at the stock market, let's do that. Right there. We are doing more investigation. We try to find pairs trades that have some type of odd correlation, or not odd. Let's see, a consistency of correlation to other products out of the realm of Forex. In this case here, you can see the strength in it in the stock market. You can see the weakness just right there in the product. I guess if we go like that, and we go like that. No, not that one. If we go like that, so we can do that, and then widen this. If I click on that, I don't want to. No. I want to do the actual index itself. Come on. Let's see if that'll do it. No, that won't do it either. All right, let's go like this then. Let's widen that puppy out. And that'll show us. You can see it's been drifting down. Just as on J4X, you can see that the S&P 500 has been rising up. And so, and I guess that's like the teeniest of the teeny of a candle, you know. So, you know, you can see there that just as, who was it that was complaining? Oh, Ferris. We're not seeing enough action. Yeah. Action, ACT. I want to say that, didn't they make, I thought they made a new high. I'm not sure, but no, I guess it didn't make a new high. You know, from yesterday, this week, you know, it didn't. It hasn't gotten there yet. And you can see here, you know, the lines are starting to bury themselves down at the bottom. and I guess the thing wants to try to really turn up. And you can see our work; it's still trying to do the same thing there. Is that right? Oh no, that's the euro. Okay, so let's go to the S&P. Let's leave that like that. And let's go to the S&P, which would be day week Duke futures day week. There it is. Oh yeah, we have it up there already. Okay, there it is. You can see it's trying to climb up there, but a bunch of red dots. It's been digesting that sell-off. I wonder if they're going to explode on the upside. The market seems to, what's really got my curiosity is the market is really having a hard time selling down now. The equity market, it's like as if they're waiting for something to happen that's going to drive it even stronger. It just has that look to it, like they're going to trap the shorts. I keep on reading and I keep on hearing the institutions are totally lost. Well, they're always totally lost, but they're more lost now over the last 3 months, since February. So February and March and April and May. It's more than that now. And June. So, over the last 4 months, February, March, April, May, and June. 5 months. So they are more lost than they've ever been before. And we talked about it yesterday. Dalio, from Bridgewater, who walks around for the last 12 months telling us all that we need to be selling, didn't own enough puts to stop him from losing $25 billion. What is it? What is it with these guys? They blow a couple $1 billion, not like thinking about it, do they? This is what happens when public money is allowed to be invested with people who are irresponsible and they're just good salesmen. I think that's what it really comes down to. And then the media treats them like as if they know what they're doing. Perfect example, Warren Buffett underperforming the S&P 500 for the last 10 years, and you would think that he's been doing double performance of the S&P for the last 10 years. The way they get down on their knees when he walks towards them, and they bow when he walks by them, and or vice versa. And they think that they refer to him as the, what do they call him? The orator, like as if he's part of the Ori, the Oracle from Omaha. Yes, I can show you how to lose money, and you invest it in my fund, and I'll underperform the S&P 500, and you will call me a deity. I mean, that's pretty much what it goes on, and I just shake my head all the time. I don't get it. And we have government agencies justifying these people saying this stuff on the television. Because remember, they're licensed. They're not like, the rogue stations in Italy where you got like 140 different TV channels and no FCC. It's the other way around. They're sanctioned by the government as responsible entities to broadcast. And what are they doing? They're broadcasting a slop and junk. I'm not talking about TV shows. I'm talking about just information in general. Hell, the TV shows have more credibility half the time than the actual information that they supposedly provide as a news or information source. So, I don't get it. And then I talk to people about Renaissance, and they go, who? Renaissance is a quant trade hedge fund. They're so good of a quant trading hedge fund. First of all, they're the number one hedge fund in the world. Number one. You would think that they would be dragging people from. They've got thousands of employees, like 1,000 employees. The managing partner, the owner and creator of it, took in $8 billion. And guess what? They gave back all their public money. They don't even trade people's money anymore. They trade just their own money at this point. That's where they're at. Matter of fact, the government agencies are so incoherent that when they were challenging the hedge funds a couple years ago to file more papers, they told them to file papers, and they came back to them and said, wait a minute, all we're doing is investing our own personal money. Why do we have to file these papers? Our attorneys say we don't need to waste the time. And the government said, would you mind if you just filled out just a general questionnaire? You don't have to fill it all out, just a general questionnaire. What a bunch of bozos these government agencies are. My God. So anyway, yeah, no wonder everybody's scratching their head all the time. What's going on here? Who's going on here? What are they talking about? Because the media is constantly pumping people who don't know how to perform. They're just salespeople. That's all they are. So, Warren Buffett is a salesman. He's not a trader. I mean, I quoted him yesterday about what he called options. He called them weapons of mass destruction. Tell you the truth, if he really understood options as good as he claims he does, he wouldn't call them weapons of mass destruction. They're insurance products. They're tools that are important, just like everybody having insurance for health or cars, traveling with your automobile. You have to have an insurance of some form, or leaving a life insurance policy for family. Insuring your home. Your apartment. They're just an insurance product. Yeah, can you use them stupidly? Of course you could. All right. Where are we at now? That's euro. So, as you can see, the euro Aussie is going down. Let's take a look at it on J4X again here. So that's going down. As you can see, the farm is up near the state road. So a vehicle is slowing down at the four-way. And funny, down further on the farm, you can't even hear that noise. And then there, because I have a window open, you can see here it's just been sliding down, matching up to the strength in the stock market for the last 4 days. All right, now let's drift over to, where are we at now? Oh, let's look at yen. Let's look at yen, one of the most active trading currencies in the world. Right there. 4 weeks in a buy, 2 days in a buy. J4X says, right there. Well, it's got a little down candle going on there. Wow. Boy, did someone turn the switch off? Is it a holiday there or what? Look at that. Yesterday, the candle was unchanged. My God, today it's unchanged. They've got no direction on that baby. And it's been moving down, and I guess, you can see that, like that whole slide there. Let's see what our Chicago Quant has said about that. So we got to go back over to right there, Duke day and week. And there we are there. Wow. So it was in a sell for about 4 or 5 days, or 6 or whatever, I guess 6 days, and then we finally got it. I guess it was the day before it really got in there, didn't it? So it's right there. So went into the buy. Do I have that written right on the yeah, I do. It's 2 days in a buy. Okay, good. So and then look at this, the weekly now. What is up with that white line? What is it? What is its malfunction there? Look at that. It can't get below the 0 line, but the histogram's been there for a week and going on a second week. And where are we on the weekly sell number on that puppy? 107.03. And we're at 107.30. What is it, like it's stopped trading or what? What is that all about? My God. What is it? Is it? Oh, wait. No, I was going to say, is there some type of holiday over there or what? What are they doing? I mean, they've really given up on it. I mean, that looks downright Chinese, doesn't it? I mean, like those 3 days look like the Chinese market, going nowhere consistently. Well, look at it on the other side of this move. It was pretty much like that too on the J4X chart there. And then you can see there was a nice big move, and the dollar went down on that, and then it joined with the dollar, and now the dollar is going up, and I guess this is the mirror. Not the mirror. The yen normally moves with the dollar. If the dollar is firm, then the yen seems to find a way to go up, and when the dollar is weak, it goes down, and that's what that was all about, and that's why we saw all the strength in the pairs trades, because the dollar was being pushed down. Now, the last couple of days, I got nervous because of the what was that Corona thing last week? What's today? Wednesday, right? So it's Hump Day. And then Thursday of last week, they came out and, oh, that's right, yes. Yeah, I mean, well, yeah, let's do that again. Let's go back to the S&P 500. And so they came out with this Corona thing. I mean, the Chinese made some type of wild statement that, it's Chinese-like. And there it was last week. It got smackadoodled. It was rolling over and then smackadoodled. So I guess this is the Chinese front-running their own personal news. And then that's one way for them to make money over there, because they sure can't do it any other way. And they need to front run or do something else, or do slave labor things. And so that was pretty much the Chinese telling us that the coronavirus is kicking, and obviously the media loves the socialists over there, so, or communists or whatever they are, and so that they ballyhooed it. Oh my God, the world's coming to an end again. We're going to lock down. And Mnuchin, our Secretary of Treasurer, came out and said we're not closing the country down again, so forget it. And so what it did is it bottomed. They tried to sell it down again, and that didn't work. And I guess this is probably like the hedge funds, because they are underwater begging for some type of opportunity to invest. And that's so they've pretty much brought the market back over a 3-day period. And now they're trapped here, and they're saying, like, what do we do now? What have you done for us lately? And are we there yet? The hedge funds are in the back seat of the car going, are we there yet? Are we there yet? And so that's where we are at the moment. So now let's. So that was related to the yen, I guess. Yeah, that's which a lot of times, over in the States here, we like to call Japan Inc. like it's a corporation. And so I guess Japan Inc. is. I guess they're they've taken a holiday. I guess I don't know. Maybe somebody inside the Bank of Japan is on vacation, so someone forgot to tell them that they're supposed to make the thing go up and down, and so we've seen that before. We've actually seen a couple people fired. We've talked about that in these webinars. They actually gave us the name who they fire, that went on vacation and did not leave instructions, and they've actually fired people. And so that could be going on right now, and a week from now we'll find out, or 2 weeks from now they'll fire somebody, and they'll be like, oh yeah, Tanaki was on vacation with his family, and he did not leave instruction to his to his underlings to do something, and so the market went sideways or went down or did something crazy. Yeah, we've seen that before. That's actually excellent. That's really happened. You think that would be a little bit more important than some of the crazy we do see on the news? Nah, definitely not. Okay, so now where are we going from there? Let's go to the next pairs trade that we look at that that does correlate normally with another product, and that is the New Zealand Canadian pairs trade, the NASCAD, or better known as the loonie. And we'll find it in a sec. It's under the ends, right? NASCAD right there. There we go. And as you can see here, it's pumping its way up. We talked about this in the webinar 2 days ago, saying that the selling in oil probably is, a incorrect thing, because this thing was acting strong. Now, where are we in that on our work? Yes, see? We talked about it because of the spreadsheet. Doc can't get it too wrong after 12 days. We can screw up a day or two putting the wrong number in somewhere, but after 12 days it becomes too obvious. And so we've been in a buy on a daily basis with a weekly buy for 4 weeks. Now, let's see. Let's how do we do this? Let's see. So we can see it much clearer. Let's go and take a look. You can see that. Now let's go put oil in here like so. There's oil right there. That's soybeans. Right there. There was Lake Texas Intermediate. And they did put pressure when they thought that the corona was... Isn't there a song? I Sharona, that's what it is. That when the corona was kicking her head back up again, or the Chinese were promoting it, ballyhooing it. And then let's go find the NASCAD, like right there. And there we go, like that. And so you can see here, we were talking about it, about the NASCAD acting very strong in here. You can see it's just playing with the edge of the daily sell, and it just refuses. The red and green, I think, stopped that from occurring, or something. No, it was the histogram. I think the histogram was plus there, and then so the white line drifted underneath it, but it stayed in there, and then we got the 12 going on there, and then you can see the weekly has no interest whatsoever to go near the weekly sell number, and so you can see here when you look at the oil, they panicked. And then we said, with it down here, we said, more than likely oil's, if this thing will not break down, and we were seeing this action here, if it won't break down, it's going to go up. Yeah, we used to have the joke on the floor on the trading floors and all the exchanges. If it doesn't go down, it'll go up. Well, yeah, of course. But in this case here, it was pretty obvious that, and I said that 2 days ago in the webinar, that this thing's probably trying to tell us that the oil wants to go up. It was when we were doing these lows on Monday. It was like, nothing's telling us that it wants to go down. 54. What's happening? 5 years rate is expected to open at 3.3. That's not too bad. When in Europe it's what, at a minus? If this thing goes negative, well, the world might trade it that way, but the central bank here in the States is not going negative. It will not issue anything negative, so you don't have to worry about that. If this thing goes negative, the market is in trouble. Okay, yeah, I agree with you there, and and you're right, and I would say the reason why you're right is because Mr. Powell, the chairman, has been saying negative does not fit America. So when people tried to drive it negative before, it really didn't go over big. So, if the world tries to drive it negative, he's not going to be issuing it negative. And so you're not going to have to worry about that. We're not going to see negative rates here in the States. What Powell wants today? I don't know. I think he's been pretty consistent. I mean, I see him as consistent. His train of thought, his words, his actions, they're all consistent. I mean, he is a open book. What you see is what you get. I mean, this is not Mr. Greenspan era or even the beginning of the Mr. Bernanke era. Mr. Bernanke was like a slow, steady openness that evolved. And then Mrs. Yellen, she took it, as far as, I guess you could say, in a partisan way. I mean, did you notice that under Mr. Bernanke, he moved rates up and down? You notice under Mrs. Yellen, the interest rates only moved once over 8 years with Mr. Obama in office, or 6 years that she was in there. So I mean, can you imagine if Mr. Powell would lock interest rates? Since Mr. Trump has gotten in office, he's taken the interest rates from Mrs. Yellen almost 0 or a quarter percentage point up to what, 2.25, and then driven them back down to where are they at now, 1.5 or something like that. I mean, at least he moves them around with Mr. Trump. I mean, Mr. Trump is a real estate guy, so they only live on leverage. So and low payment system, or not low payment system, and and so they're always borrowing money. I mean, Mr. Trump is worth, I don't know, his assets are worth like $35-45 billion, but his actual equity versus debt is only like $4 or $5 billion or $3 billion or something like that, because he's real estate, so they leverage their holdings all the time because they have people paying for their properties. So in other words, they use other people's money to buy assets, and in their name, no less. So they control those assets, and then they derive the income from those assets. So when you say what Powell wants today, he wants a stable market, and just like Mr. Trump does, he wants low rates and a stable market. But neither of them want minus ones. Trump never says, I want negative rates. He says, I want low rates. I want them to match up to the negative rates, in the sense of, America pay. Trump would be happy if they would bring the rates down to like a 0.5 percentage point or a 1/4 percentage point. I mean, that's where he wants them to be, because he wants them to be somewhat related to the negative rates across the planet. But the media always says, "Oh, he wants negative rates." No, he doesn't want negative. You can't find a video that says Trump says he wants America to have negative rates. What you hear is Trump complaining about negative rates, and he wants the American rates lower to match up to deal with the negative rates. So in other words, he says, why do we have to, now you can get this on the videos. He says it all the time. I want to pay less. I want America paying less. Everybody else is paying minus. We want to pay like, 0.25% or 0.5% or 0 or something like that. That's what he's saying. But, he's not saying, the thing that the media constantly mumbles. So you're not going to see negative rates in the States. It's not. Powell said it a couple of days ago. He says it all the time. He says it. We've talked at our meetings at the central bank, the Federal Reserve, and almost there's a total 100% consensus. Maybe one person out of all the presidents of the different Federal Reserve banks around the country and the members of the Federal Reserve Board itself, they all say no negative rates. They all say that it would be harmful. So let's see. So Kristen says 33%. It will affect also the currency. You would think it would drive the dollar down. That's another thing there. What we really want is a weaker or a lower valued. I don't think we want a weak dollar. We want a lower valued dollar. We think it's too expensive. We'd like to see it go down in value. That's what Trump is always mumbling also. He always says the same thing. You'd like to see a dollar that's lower in price. We don't want to see a weak dollar. We just want to see a lower priced dollar. It's the world that keeps on pumping the dollar up. I mean, look at the Chinese. They bitch about us all the time. They're always complaining about us, and then they got $1 trillion invested here in the country in bonds. They have nowhere else to put it. I mean, they know that they'll lose so much. They'll lose half of it if they move it anywhere else. So they're going to leave it right where it sits. I can see Powell getting himself in a corner eventually. In a corner. In other words, he will have no opportunity to change what he's doing. Define corner. Be trapped in doing what he does now. If he's in a corner right now, he's doing what he wants to do. You know what I mean? Not buy ETFs, buy more ETFs, can't buy ETFs. How do you define trapped in a corner? That's the thing, or in a corner eventually. Having to lower rates more and going minus? I don't see that. When you have the power to buy the way he does, you got to imagine what? The Federal Reserve and the U.S. economy is what? 1/3 the Earth's economy? Is that what we are? Aren't we like 1/3 the world's economy? Right? And when you take away the pretend number from China, it gets even worse probably. Probably a bigger number even. So, I mean, what? Isn't our economy like, if you subtract out China's pretend number, aren't we like the next 10 economies are equal to ours? Is that? Am I saying something that's not realistic, or is realistic? If you take out the fake Chinese number, okay, and it's not, I don't know, like 12, whatever it is, it's not that number, and you multiply it by 3, it's like smaller than the Chinese economy. Really is smaller than the, like, I don't know, somebody out like number 7 or 8, right, in world economies. So it's really hard to see how they're going to get trapped. I mean, that's the way I look at it. Now, if I believe that the Chinese economy really is what they claim it is, which I don't believe it, until they start trading 40% of their currency starts to trade as 40% of the world currencies, and start to challenge, the euro and the Japanese yen, and now they're less than 1% of the world currencies traded. So, those two things that's who's trapped in a corner as far as I'm concerned. That I see as a problem. But him buying ETFs and buying bonds and keeping the world market stable, I don't see that. In theory, let's see. In theory, thank you, Robin. Talking about the quants again. If anybody has any questions about our charts, you can go there. If you don't come here and ask me the questions, and obviously I don't see anybody asking anything about that, you can go to there and get an instructional thing on how to understand our quant system. In theory, but that's withdrawal. Let's see. Okay, so in theory, but that's withdrawing liquidity. That's why they backed into a corner. Okay, so you're saying in theory, okay, but that's withdrawing liquidity. Why are they going to withdraw the liquidity? They don't have to withdraw liquidity. They can create equity. And when you're maybe 30, 40, or 50% of the world economy, who's going to back them in a corner? You got to have somebody back. In other words, China would have to come out and actually have a currency that trades at 7 and trade 40% of the world cash in the world, currency in the world. That would back him in a corner. Obviously, like Japan and Europe trade what? Maybe 30% of the world currencies are traded in the two of those. And they have a hard time doing too much, but maybe that's why there's strength at times in the euro. So let's see, liquidity. That's why they backed into the corner. Rates are rising, so they must go negative to get real rates closer to zero. They need to. Let's see. So they need to. Let's see. So, okay, let me try that again. Liquidity. Why they backed in a corner. Real rates are rising. I think the problem there is, what is real rates? That's what I'm not clean on that one. I'm not you. I mean me. My mind is not really clean on real rates. So you're saying real rates are like minus? So real rates are rising, so they must go negative. So you're saying that real rates are negative. So you think that real rates should be minus to be normal. And so to get them to zero. Well, I don't know about that. There's a lot of oxymorons in that whole train of thought there. First of all, you're assuming that negative interest rates are a healthy, normal thing. And there's all kinds of papers coming out all over the place by some honest economists saying this is chaos. The negative rates in Europe are killing Europe. I put one of them up on the webinar like 3 months ago. Real rates will rise eventually. Yeah, just like the sun does every day. I'll go with that. But negative rates are not a norm. I mean, they are in Europe, but and Switzerland, but they're not a norm. Or like, Japan and so forth, you know what I mean? Hey. All right. Anyway, this is like an intellectual day. That's what this is. We're dissecting exotics, trying to understand pairs, and at the same time trying to figure out exactly what the hell is going on. Okay. All right. This is Doc from North America. We will catch you on the funny papers tomorrow, or better yet, right here at Dukascopy. So tune in, and we will dissect something else. I don't know. Maybe I'll find a squirrel from outside, and we'll do a live dissection. Anyway, this is Doc from North America saying arrivederci and happy trails to you until we meet again.